but I do not know why that's the only title that will start a stream. Whatever. So we're gonna start here on the monthly, and as you can see on Friday, we ended up higher. Of course, now with the contract rollover, we're switching over to the March contract. We're getting obviously a little bit of a gap higher. Something I like to do for this, and if this is confusing for a lot of you guys, what I'd like to do to just try to help maintain some of the levels is switch over to the SPX. And that's the S&P 500 index, right? Because this doesn't have contract changes. It's continuous, basically trades just like a stock. So your levels are going to be staying similar. So this is something that you can do to kind of find your levels. And when we look on the monthly, we're seeing this +4 starting to form, or a developing +4, right? Previously, we didn't have anything, but we do have a developing +4. And this doesn't really tell us anything, just tells us to be a little bit cautious unless we get back below this previous close, which was like 45.67. This is the SPX, remember, so the levels are going to be a little bit different. Now, if we switch back to the ES, and I know I'm making this super confusing, and if you're using Thinkorswim, you can go over to futures and you can go adjust for contract changes, press apply, and when the cash session opens, it will adjust for you if you want to use it that way. But for now, we're just going to stay on the ES as we always do, and just kind of pay attention to what we get. Like I said, we're going to be paying attention to that previous month's close. Now, if we are switching over to just, if we want to switch over to just the March contract, we can do this here. It's not going to give us as much data because the March contract was only so long. The contracts were only so long. But this is something that we can look at here. So you can see that previous close on the March contract, that 46.2675. So those of you guys, I know your levels are kind of messed up, and it is frustrating sometimes. This is something that we see when the market tends to get a little bit bullish or a little bit bearish. If you guys remember trading during COVID, we would see these big gaps, kind of priced in lower. And if you look at the upcoming contracts here, switch back to just the ES. You can see all of the contracts here. And so the March contract, which is what we're switching to, and the reason being because we have more volume. If you look at the June contract is trading up at 47.10, and then September contract 47.59, and then the December contract for next December is trading down at 43.18, right? And so, there's only 6 volume on that, so it's based off of where the last trade was at, but so this is something to kind of keep in mind here, as we head forward, or if you're having trouble kind of managing those levels. So that 46.2675 is going to be a key level that you want to see the market stay above should the market want to continue being bullish. Now switching over to the weekly, you can see 1, 2, 3, 4, 5, and then 6, 7 weeks in a row or one time framing higher. We do have another green week this week, another +4 week this week, indicating that we would want to see the market stay above Friday's close, and that's that 46.60 quarter on the weekly basis in order to kind of get that continuation of the +4, right? The momentum continues to build. Now, we do have balance forming here on the weekly, so we had a 2-week balance, and so the key will be if we monitor for continuation, should we get above, failure to get above, we want to basically look about half back, and that's that 46.25, that monthly level that we talked about. And then we kind of have an equilibrium forming here around that 46.20 level. So that'll be kind of the key level for me on a deeper pullback into this week. If we do get a deeper pullback, we'll be looking for buyers to show up at that position. Good morning, Nelson. So switching here over to the daily, You can see the balance continues here. We're just getting, just continued balance for this extended period of time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days in a row now. And we have a +4 day on Friday. It's that same close, the 60 quarter. So continuation above that level is going to be key. Now we'll zoom into the profiles to kind of get our key levels, but in reality, remember this is just one big balance here. So inside here, the market can really just continue this sideways movement. Now typically, and I don't want to say, actually, I'll retract that. So one thing that you want to be thinking about, or a key thing that you want to be thinking about when we get these long-term balances, is the amount of pressure that's building up. Imagine that, you're just building up pressure because all of these people are in contracts one way or the other. And, if you have people all in here and half are long and half are short, well, whichever way the market goes, let's say it goes down first, all these people that are long are going to kind of be forced to sell, which can add on to the selling that's already going on. And the same thing inversely, if we break out to the upside, all these people that are short will be forced to buy back their position and can take the market higher. Now, when something like that happens, it doesn't necessarily mean that the prices are going to, or the prices are going to hold, or the market's going to hold. But what can happen is, because it gets, past a certain level or to a certain level, it can bring in new money and then cause continuation. So, they might not have liked to sell it from here, but once it's down here, they say, okay, well, now that it's under 4,500, I'm a seller. They start to sell it, and the market continues down. And then the same thing on the upside. Let's say it jumps above 4,700. They say, oh, well, I wasn't a buyer down here, but now that it's above 4,700, I'm going to start buying. That's how these laggard buyers and laggard sellers really kind of get into the market. So definitely something to be cautious of, pay attention to, and don't get fooled by the randomness of this contract change. Okay? Just maintain. I know it can be frustrating, but it's all part of the game here. So on the profiles, you can kind of see we closed the day 46 quarter on Friday, and this is the H contract, the March contract. You can see where that big distribution is at, right? Big ledge down here, 46.31. That's going to be kind of that same level from before. We had that 45.70 level on the previous contract, 45.68. So it's going to be very similar level there. Something that you want to be paying attention to. With this low volume up here, we want to see if buyers are going to be able to kind of step up and get that continuation. We're going to be opening up very close to the value area high from Friday, 35 range. You could move this thing down to 50 if you want. It's very close. You do it real quick just to see what it looks like. And 50, I mean 50% of volume, something that I do when we have a little bit larger days. So it's looking a little bit better here. And so what you're looking for is a return back inside this area and for buyers to step up. So we can see kind of the impulse from this lower area, right? Kind of that top of that ledge. You got the impulse during A period. This low was kind of mechanical right off of the open. So I'm not a huge trustee of it. So if we start to break this, if we start to really break down with some tempo and get below this 42 area, it really turns me off to being a buyer. So I think this area here is kind of the area that you're going to want to see hold, actually. So from about, say, 46.46 to 46.43 is really where you want to see the market hold should we get this continuation to the upside. That's going to be a return to balance, or return to value, and then a bounce from there. And then your target would be that 46.60. So you're looking at about 15 points there. And you definitely know that below this level here, starts to look for acceptance, and then the rotation back down to that 46.25, 46.20 area is most likely going to happen. So gives you a little bit of space there, right? And then as the market gets back above this settle, it really starts to get more bullish. We do see that the volume, most of the volume, even though not a lot of time on Friday was spent, we do have a lot of the volume up. And then we also did finish on a spike to the upside. We did close back in range, but there was a little price spike at the end. And so I still like to monitor those things and pay attention to that price exploration, right? We looked up to see if there were some buyers. It was very late in the day. Didn't really find them and kind of just closed, but we didn't really melt back down very far. We just kind of closed back into the volume. So that's going to be kind of the key. And if we do get some bullishness right off the open, and you kind of see this overnight distribution is rather large. So if we hold this overnight distribution, get back above that POC, which is about 46.65, there could be continued upside from there for sure. And the level really would be looking for above that would be 4,700, honestly. 4707 quarter. It's kind of the level that I'm looking for above. So we'll kind of be aware of that. We'll monitor this overnight distribution. We've pretty much got overnight inventory, probably like 80-20 short, I would say. Most of the volume coming in below the settle. And remember, the volume is kind of split between the two contracts. You got a lot of people putting in volume on the old contract because they're trying to get out of their positions or roll them over to this new contract. So there's a lot going on this morning. So one of our members, Doped, was saying, it's probably best to just stay patient and kind of let it settle out before you really get kind of crazy. And remember, we've got some big news this week. We've got some news on Tuesday, and then we've got Powell coming in for the last meeting of the month on Wednesday. So, definitely some volatility being priced into the market this week. So a day to be cautious. But other than that, those of you guys on YouTube, if you're interested in joining us, send me an email. And we'll be running a basics class for those of you guys that are new to the profile. And even if you're not and you just want to get a refresher, right? Something I always say, it's very important to always remember the basics. You can't build a house if you don't know how to hammer a nail, right? That's just part of how it works. So, never be afraid or never shy away from going back through something that you think you already know. And you're only going to become a master if you are a master of the basics first. Other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan. And I will see you guys tomorrow.